The modern economy operates 24 hours a day, 7 days a week. But the banking system that supports it still runs on a schedule designed before the internet existed. When the clock strikes 5 on a Friday, the vault closes, and the core financial system goes to sleep. Because of these rigid operating hours, moving money across borders can still take several business days to clear. If a transaction needs to settle over a weekend or a holiday, it simply waits in a queue until the banks open again. This diagram shows how digital dollars, known as stablecoins, bypass that delay. Instead of moving through those static, block-shaped banking checkpoints, the value moves across independent blockchain networks. It travels globally, instantly, at any time of day. Watching billions of dollars flow through these protocols gave the traditional industry a blueprint for 24/7 settlement. It highlighted a growing gap between what the legacy system provides and what a digital native economy can achieve. But private companies issuing these digital dollars created immediate friction with governments. The ability to issue and control currency is a core power of the state. Regulators quickly grew concerned about losing oversight of the money supply. To maintain that oversight, central banks around the world began developing their own digital money, central bank digital currencies, or CBDCs. The technology to issue a CBDC exists, but attempting to connect it triggers complex policy warning signs involving monetary stability and national sovereignty. Central bank nodes stall. Meanwhile, private stablecoin networks on the periphery continue to accelerate, using mature technology to move money instantly. The global economy requires the speed and efficiency of digital networks to grow. But it cannot adopt them if the cost is destabilizing the carefully balanced monetary policies that protect national economies. To bridge this gap, major financial institutions are quietly engineering a different approach behind closed doors. They are calling this solution deposit tokens. These are not a new, volatile asset like Bitcoin, nor are they independent stablecoins managed by a private tech company. Looking at this split screen, you see the mechanic. On the left is a traditional commercial bank deposit. On the right is that exact same deposit translated into code. It's a direct digital representation of the money already sitting securely inside a bank. This solves the regulatory tension. By keeping the money inside the existing insured banking system, institutions bypass the governance debates of CBDCs, while gaining the ability to move that value digitally. Banks realized that the asset itself, the money, does not need to change. The innovation lies in upgrading the infrastructure that carries it. This cross-section illustrates the shift. The top layer, traditional fiat currency, stays the same, but the fragmented payment rails beneath it slide away, replaced by a programmable digital network. Now data pulses continuously, securing instant 24/7 settlement beneath familiar money. Global institutions are focused on modernizing the highway while keeping the currency in its familiar form. This infrastructure upgrade is being built right now. Global banks and central institutions are already running tests and processing transactions on these modernized networks. Moving the money is only one piece of the puzzle. A completed transaction also requires verifying digital identity, checking compliance, and confirming the final settlement. To handle these elements simultaneously, developers are building toward a framework known as a unified ledger. Instead of money, identity, compliance, and settlement operating in separate silos, a unified ledger connects them. Collapsing them into a single continuous ring allows all parts of a transaction to be verified and completed at the exact same moment. It replaces a sequence of delayed manual handoffs with an instant automated process, creating a single operating system for global finance. Most public attention remains fixed on retail cryptocurrency prices and market speculation, but that noise obscures the actual structural work happening behind the scenes. The major institutions are prioritizing interoperability, tight security, and high-speed settlement over developing new consumer assets. The fiat currency we rely on is undergoing a massive and visible upgrade. The money in your account will look exactly the same, but the mechanics of how it travels from one place to another will be entirely rewritten. The shift occurring today is happening at the level of the network, a quiet upgrade to the invisible systems that manage every dollar in circulation.